What's up, everybody? It's a trading update for January 24th. And as we can take a look at the SPY activity for the last 2 days, specifically today, we had the nice gap down to recent lows at 199 and a half. So if we go back to the 10-day here, we can see the bottom of this supposed V rip, or where this V started here was 199 and change. So we got down to those lows, opened up at 199 and a half, somewhere around there. We'll go back to this 2 day here, and we can see action today has been mostly bearish. I mean, most names are squarely in the red, but it was like a trickle down kind of thing. So there wasn't any panic selling or anything like that. It was just a very slow trickle down, set apart with many, sort of algo sweeps where they squeezed shorts every step of the way kind of thing. So it was very, very slow bleed. Difficult to make money for a lot of people today, especially off this rally, which we'll talk about in a second. Had something to do with the oil markets as well. But let's pigeonhole a couple different names here. Let's go through some sectors. Banks here. We got to talk about the banks because, goddamn. I mean, monster gaps on all the banks down simply because of the JPM and the Wells Fargo earnings. JPM profit was lower here. Wells Fargo, these were the two big ones that reported. Wells Fargo was a little bit more bullish than the rest of them. But Bank of America here down through 16 bucks, and the Citigroup continuing to sell off down to 485. 480 and a half. So if we go back to the 3 month here, we can see money really, really coming out of these financials. We're not seeing that much coming out of the credit cards, which is kind of interesting. So we go back to Visa, we go back to MasterCard here. Yeah, they did sell off kind of decent today. Most of it was on the gap down here. So we go back to the 3 month here. We can see Visa and MasterCard still kind of being held up. These are also considered part of the financial sector as well. High flyers continue to sell off. We take a look at Apple today. Apple, there's a buyer at 109 just chomping up the bid. I don't know what or who it is, but this 109 area they have not been able to give up. We go back to the 10-day, we can see there's a gap a little bit below 108 here, and I was going for this short, for them to just tumble down to it. Never really got it. And then we just kind of had a ridiculous short squeeze towards the afternoon here. So watch this Apple at the 109 area, even for the health of the markets too. If you see this 109 area hold up, and this thing floats all the way back here to 113, that's pretty damn good for the markets here. We take a look at the social media names. These things are also being held up too. So, you're looking at the SPY really bearish here. Most names pretty bearish. Twitter still hanging around 40 bucks. So this could be your, the sector that you kind of want to be in if we do start to get some rallying. As you can see, LinkedIn kind of holding around here 220. The Facebook here had an upgrade this morning. But just kind of hold up here around 76. We'll see where that thing goes. And now let's go to the afternoon here trade and take a look at oil. Oil put in a pretty big spike up, and this is what also subsequently pushed some buyers back into the market here. So all the oils and the energy sectors really started to rally closer to 230 around there, and now we go back to the SPY here. We're looking to probably close right around this $200 area. There's a lot of options activity on both sides of the trades around here at 200, so we could shop towards Friday just up and down around this 200 area. We'll see how we do. As for tomorrow, again, we got a couple of more banks here reporting, so make sure to watch those. But other than that, we'll see you tomorrow for the pre-market update.